Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we've got to knock out our standard disclaimer, and then we get over some charts and start looking at some trades. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there's a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. So we took a quick poll of the team. Before we got started here, and we have a half a dozen. The theme tonight is supposed to be maximizing gains in the first hour of trading. So we're absolutely going to talk about that. That's our theme tonight. But we're going to mix in a handful of other concerns that were voiced in the pre-webinar session here. So let's get started. Let's get over to screen one where I'm going to start with a crude chart. And we're going to look at today. And here's how I'd like to do it. Okay, today's Thursday, and yesterday was inventory day. If you recall, Wednesdays are inventory days. And let me orient you here. So this was midnight Pacific here. So this is the Asian session here, and this is the beginning of the European session at midnight right here on crude oil. Now, what direction was crude in going in from the end of the Asian session? Well, basically from here. What kind of was crude trending? Was it going up? Was it going down? Was it going sideways? So here's what I'm going to do. While you're typing that in and pondering the answer to that question, crude going up, down, or sideways, this is how we're going to approach things, just like this. Think of yourself as, I don't want to say, in order to be successful, you need to have I don't want to call it a system. You want to have sort of a protocol that you follow, okay? Protocol. For preparation in the morning. And you really should get this down, and you should try to do it every single morning in the same way. Now, a regime, however you want to call it, you want to have a systematic way to approach getting ready to trade. Because if you don't have consistency from day to day, this is going to create a problem for you. In other words, you're getting ready for the open of the market, and you're doing certain things to prepare yourself to get ready to trade. Now, the first thing I'm going to tell you, you want to try to do that every day. I do it. I have a protocol I follow. I actually get up in the middle of the night and turn my machine on. So my machine's all warmed up. You don't have to do that. Obviously, you can get up just a little bit ahead of when you start, and that's perfectly fine. I clean out the database, make sure that's all cleaned out. Everybody knows how to do that, right? You know how to clean your database out, repair your database. Anybody not know how to do that? If you don't, I'll pull it down and show it real quick. Anybody not know how to do that? By the way, is everybody okay? Can you hear me all right? Some of you don't know how to do it? Okay. Hold on. Let me all right, stand by. Let's see if I can drag this all down here. I'll show you real quick. Just take 2 seconds. And this will actually be healthy because this is like this is kind of the first couple of things that I do when I'm sort of getting ready. Okay. All right. So let me get the control center down here. All right. So all my charts are set up just like you see in the room, right? And they're all loaded up into a workspace. Everybody knows what a workspace is. You have a workspace, and you save your workspace, and your workspace has all the charts that you're going to trade. Whatever you're trading for that day, on your screens everything should be all set up in your workspace. So when you bring it up, All your charts are all there. Everything's there. You can see that, the Viper indicators are there. All the things that are there. Okay. Now, before you log into your data connection, you go into Tools, Options, Data tab. This is what I do every morning when I start up. Bring up Ninja. All my charts are there, ready to go. I go to the Data tab. I hit Repair Database. I'm not going to hit it because I'm logged in. It won't let you do it. You do this before. Now, if there's any, errant ticks in there or some old bad whatever in there, it's going to clean it all up. This is the first thing I do. And it usually takes 20 seconds or whatever. It pops up, says repaired. Don't hit reset. Don't reset instruments. If you do this, like your trade history and all the stuff you've done before, if you want to ever go run some reports and what have you, it's going to wipe all that out. So you don't want to don't go reset. I'm just telling you, no. Repair. Just repair. Okay, so that's done. And then you go ahead and you log into your connect to your provider, and if all the data comes up, and now you're ready to go. Okay, very simple thing. Now let's suppose that this particular morning, say it was today, you're looking at the chart. And in this bullet point here, I have to type in one of the first things that I'm going to do when I start looking at oil, or any market for that matter. And the number one thing I would do would be what? In my prep. My prep protocol. Okay, I got the number one. This is the first thing I'm going to do. And I got to fill something in, but I don't know what it is. What might it be? Maybe you could share with the team what you do. Everybody here's got to do something, right? You just don't get up and start randomly looking at charts and say, what the heck am I going to trade today? In fact, before you do this number one thing, let me just put some fundamental basics things. It really isn't really prepping for trades, but I'm just going to put a sort of a little thing real quick. I'm going to say you should know the instruments you're going to trade ahead of time, obviously. Trading for that day. And just as I said, they should all be loaded, preloaded and set. Loaded into your workspace. Right? That's just a given. That's not really prepping for trade. That's just sort of background information that you know you need to do. So now we're at one. Now we're getting ready for trades. Everything's all loaded up. You're good to go. Draw those lines. Please. 1,000,000 times, please. Pinky swear 1,000 times with me. You're going to do this one thing. First, draw support and resistance lines on your chart. So let me ask a question. Who is responsible for taking trades on your computer? You? Me? Gary? Some friend you know from out of town visiting for the week? Your wife? Your spouse? Who is responsible for the trades you take? Look in the mirror. I got news for you. It's you. Is the purpose of the trading room to tell you what to do in terms of trades? Or is it there as a guide to help you see something that you have already seen for yourself? Oh, for Pete's sake, this happens every time. Stand by, please. 1 second. I'll explain what's going on. Hang tight. 1 second, please. So here's why I'm frustrated a little bit. It's okay. Let me explain what's going on. I live in a very quiet neighborhood, okay? I mean, like, occasionally in the street some kids are playing out there or something, whatever, they get off school. Very quiet. There's not a lot of noise. There's no crime. It's just a really nice neighborhood. I've lived here a very long time. But every Thursday night at 5 o'clock, when I'm ready to start a webinar, the landscaping service shows up at the house across the street, and bam, blowers, mowers, honkers, horns, trucks. Oh, man, what can you do? The third voice inside my head takes my trades. Shelling is loud. No, you know what? I got this fan. Let me move the fan out of the way. I'm sorry. I'm trying to keep it cool. I had to close all the windows in here. Anyway, you are responsible. Everybody is responsible for taking your own trades. The room is there as guidance. Okay, technically we call trades. We show where trades should be taken. We show areas. We explain the mid-band. There's support resistance areas we call out. We try to explain where the trail stops might be going. But this should all, if you're going to be successful long term, we have a lot of people who are members with us and have been for a long time. And the successful ones over the years have done this. They come in and they prep their own charts and they see their own trades. And they're listening. Let's say if they're trading crude oil. They're in the room. Their chart is ready to go. They see where they want to take a trade. They hear a call in the room. Let's just do a hypothetical. This is all getting ready for that first critical hour, first 30, 60 to 90 minutes. Let's pretend that this is the morning time. And you're up here somewhere, and you can clearly see that you were in an uptrend overnight there, right? And you might hear words to the effect of, you know what, if I see crude pull back anywhere in the area of the mid-band around 69, say 51, 53, and it bounces, I will be looking to take a long trade. Now, maybe that call that you hear in the room was made way over here. Way over here. Let me just get this out of the way. I don't want to get this all confused. Everybody knows what you're going to do to get ready in the morning. You're going to draw this line. We're going to do that in just a second. Okay? Now maybe the market is up here. So I think where people get confused a little bit, and this is how you need to try to train yourself to think about this, is if you're in a trade already, you're managing the trade with your trail stops and targets, yes? So we know that. However, if you are not in a trade, then you got to be looking which way. You got to be thinking about what direction. The future, right? You can look back here and you can see where support and resistance are, and we can put lines up here, you can put a line right now, put a line right here if you want. Right? There's another line here. You can see, and I'll explain the lines. The lines are where you see a collection of places where a price has tested either up or down, and it's pulled back from it. So, for instance, can you see all the touches here? This is where you would put a line. Now, it's not too ironic that this line is sitting under where? Where is this line sitting in relation to this? Sitting, I don't know, 4 ticks under the mid-band. So, logically thinking forward, if we say to ourselves in our preparatory trading minds, if we get a pullback down into here in an uptrend, what might we do? In this area right here. What might we do? Get ready to go long on a bounce. So that's why, and that's how I've trained myself over the years to think. So here's another helpful tip, okay? And it takes a little bit of practice, but you can do it. So you're constantly doing 3 things. You're looking back at the past to identify support and resistance, which is where you ultimately wind up drawing some lines on your chart. We know that. That's one of the first things you do, right? In addition to that, when we prepare to take trades, we need to do the following. Think about where the market might go and prepare to take action there. How many of you do this already? Now, Charles, listen, you know what? You promised us this whole thing about maximizing gains in the first hour of trading. You're talking about some kind of thing about looking on beyond the right-hand side of the chart. You are lost, man. What are you talking about? What are you talking about? Why am I even talking about this? Anybody think this is important? If you're getting ready to trade the open of a market, any market, equity, doesn't matter. Currencies at night in the European session, crude oil at the pit open, do you think that this step might be important to you? Right here, this one. Think about where the market might go ahead of time and prepare to take action at that point. So what I mean by that, the three directions that we're scanning is we're looking back, of course, for support and resistance. We talked about that. If we're in a trade, we're managing it. Yes, your targets and stops and deciding where you want to get it out. Yes. So that's current. This is current time. This is the past. This is what's happening now. And we need to think about what's going to happen in the future. Past, present, and future. Think of it that way. That's a good, healthy way to think about it. You want to think about the future. This is where many traders fail. They don't think about the future. You're in reaction. Some of you, and I might be here tonight, are in reactionary mode. Look, are you trying to tell me that you got a crystal ball there, Mr. Charles, man? You can tell me where that market's going to go? Is that what you're telling me? Because you're nuts. You don't have a crystal ball. Nobody can do that. That's true. However, if you prepare for a market to come to a certain area ahead of time, do you think there's a higher likelihood you're going to be successful in a trade or a less likelihood if you don't think about it? Think about the odds, okay? If you don't plan for this and you just react to whatever the market does, is your success rate going to be higher or lower, in your opinion? If you don't think about this, what's going to happen over here, beyond the right edge of the chart? Toby says it's going to be way higher. Your success rate is going to be way higher, exponentially higher. I would pit a trader who looks at the future and plans ahead to take trades, like this case, a long bounce around the support and midband area, way ahead of a reactionary trader who doesn't do hardly any planning at all and just reacts to markets wherever they go. This is the key. I am handing you the key. This is the key right here. If you start doing that tomorrow, I guarantee you, I'll even bet some of you if you want, that your trading will get better just by doing this right here. This. Planning for the future. Looking ahead into the future of what might happen. Now, let's play the scenario out. Here we go. Okay, I'm going to pause it right there. I'm going to blow it up. Way big. With these bars right here, what are these bars doing right here? I mean, literally right there. Here is the line you put for the price or resistance area. That's already in place. Here's the midband right here. In the room, somebody said, if it gets down around 51.53 and bounces, I will look to buy to get long. You hear that in the room. You've already mentally prepared to take a trade where? I circled it. Right here. You are mentally prepared to do it. Now it's sitting here, right here. So what do you do? Let me help you out. And if you didn't watch my webinar from the other day, I'm going to do it again. This is super simple. You take a ray. I don't know if I'm going to try to position this correctly. And the ray needs to go over the top of the candles. It's an A, B, C, D, E, F, G kind of thing. A, B, C, D, E. You tell me to stop when you see the candle you're going to use for the top of your box to draw a region box. Type in an S when you think I'm on top of the candle where the top of the region box will go. I'm going to start over here. Can I start here? Can I go with that candle? Can I start with that one? How about here? Can I start with one of these? Can I just start with one of these? I mean, just they're retracing. Isn't this place? Isn't someone can I get in here? How about here? How about this one? How about this one? How about this one? How about this one? Here, let me make it easier. 1, A, B, C. And we'll even go one more. We'll go D. Top of the box. A, B, C, D. Which candle top will form the top of your region box? Actually, technically, from a location standpoint, in terms of the top of the wick of the candle, B is almost exactly the same position as D. The only difference is when they form. D obviously formed later than B. Well, I'm trying to strike to the heart of some of your concerns. Things you told me in the pre-webinar session was, I'm getting in too late, I'm getting in too early, I'm too aggressive, how do I get out? Where's the highs and the lows? How do I trade at the mid-band? I'm trying to address that. You've got to know where you're going to take that trade, right? Where are you going to put your region box? How are you getting in? Let me give you a couple more candles. There's another one right there. There's another one right there. Another one right there. Does that make it a little easier? Let me move this out of the way a little bit so it doesn't confuse. We all see it's kissing support. Everybody sees this kissing support and holding it. I think the proper answer would have been B or D. This is really where you want to form the top of the box. And your box would start to draw just like this. And you would continue it out like such. Now what happens is that the swings, as it's going down, as it's descending, these little swing dashes are drawing it where support is. See how they're drawing here? See how it's drawing dashes? See how it's drawing those dashes? So you can clearly see the support. But can everybody see how the tops of the wicks of these candles right here are all coinciding with each other, forming the top of the box? Can everybody see this? If you're having issues doing that, then you should really work on this, right? All right, let's continue on. I think everybody pretty much got that right. Some of you picked C. That's fine. Okay, let's move on with our region box and see what happens. Here we go. Okay, some candles going a little bit lower down to that support area. Wick of the candle is still holding 55. Your box is continuing to draw as we have it, like such. Now notice the ray is broken, but we're still going sideways. C is too low. Who's asking about C? In my opinion, C is too low. You got to take the swing of a candle and you got to normally go at least one back, sometimes two. if you go too tight, here, let me draw the box, like a question about C. C candle is this one right here. C candle is right there. Your box would be too tight. It would be right here, and you might get filled. Maybe you wouldn't get filled. Because this closed down, right? And this closed down. In this particular case, ironically, I think this was A, this was B, this was C, and this was D. This little doji right here. Now, if you'd drawn it tighter, ironically, you closed up, but it didn't go through here. This closed down. This closed down. This closed up, but it didn't break it. This closed down. And if you had this box right here, if you had drawn C, C could have been okay. No, bias is up, Bill. Trend is up. So this would have been a long-only box. Yeah, long-only box. In this case here, yeah, okay. The tighter box would have been filled on this bar, but obviously did not close above the slightly looser box, and either did this one. Right? That closed technically back inside that box. So the second looser box didn't get filled until this bar right here. Everybody see that? Let's pop over here to the left. I'm going to draw another ray. It's going to look like this. Let's do another exercise. In this descending sort of retracement here, where would the top of box be? Would the top of the box be on candle A, B, or C? Now, while you're typing in your response to the second question on this trade, I'm going to help you out a little bit. It does qualify for the minimum retracement to take a long trade on a retracement in the fact that it closed below stealth, check mark 1, closed below line 6, check mark 2. Bars are all closing. We're not quite to the mid band, but we've met the minimum criteria. You know, what's a good way to help you see this? Do you think it's easy to draw the top of your mid-band box to get in, or in this case, shallow retracement box? How many candles do you want to see to draw the top of the box? 1 or 2 or more? So let me do it this way. Let's say you're coming down, and you're following the tops of the candles. Do you have 2 candles here? Yes. Where the tops coincide with each other. You should have at least 2. That's the answer. That's right. You should have at least 2. How about this one? Does this candle have 2? This one? No. Does this candle have 2? No. Well, does this candle have 2? Yes. Does this candle have 2? Well, maybe you could say this one does, but you're still, when this is unfolding here, let's pretend we're watching it happen in real time. Here's another thing, by the way. This is another little tip I said in the other webinar, but I want to remind you. Does anybody start drawing these rays? Anybody using the rays that I showed before? The rays are really helpful. It doesn't take hardly any time to draw them. You want to put them right at about 45-degree angle, either up or down. 45-degree angle. Shane says I've started drawing those rays, and it helps a lot. Toby uses them. Excellent. Here's what I want to say, and this will help for some of you said I'm too aggressive in getting in, and I always get in too early and I get stopped out. Look at the distance in the retrace between the location of these bars and the location of your ray. Can you see this gap? Can you see this? See how it's fairly substantial gap? Then, in other words, the bars have not come down sufficiently to where they are now exhibiting a reinsurgence of buying. When the reinsurgence of buying in a retracement occurs, it will come to and actually break through the ray. That's why the ray is important. If you can take time to draw a couple rays on your chart, in addition to your support and resistance line, this ray is pretty important, especially if you're trading these retracements. Now, I want to ask a quick question here, and let me follow on with this. So at the time you were drawing this, you're kind of watching the tops of these candles form, yes? You got another one here. And I always look for tops of candles to correspond with each other. Okay? The wicks and the bodies have to be close to each other. And that's caveat number one. So let's start to document this a little bit so you get a sense of what I'm talking about. In a retracement, bars should be close to, or in the case of a long, closing above, or below, the retracement ray. Right? And the top and bottom of your box region boxes should have at least 2 candle tops or bottoms that can be connected, so they correspond with each other. This is really going to help you right here. I'm telling you, as you're watching these retracements, if you're blowing the retracements because you're getting in too early or too late, this is going to help you a lot. Take some time to draw that ray, and you're going to notice when the bars are way far away from it, you got a huge gap here. You're not ready yet. It's not ready. It's not going to be ready. Let's look at how the bars are in position to the ray. Can you see how the ray, these bars are actually kissing the ray? See it? And this one closes above it. Now, if you had drawn your box here like this, if you were more aggressive and you said, okay, well, Charles, you said 2 be connected, and I see these 2 tops are connected, and if it comes up, it's going to break the ray, then you would have actually been filled long on the close of this bar right here. Right? So your box would have looked something like this. This would have been the aggressive tight box. And look, you know what? It's going to get you in sometimes a full candle ahead of where a looser box might be. However, let me show where the looser box is drawn. That's where the line is right there, right? If you drew your box like this, well, it may have been filled in the same candle. No, the wick. If you'd used the highest wick of the combination, which is these 2 right here, then you would have been filled till the close of this bar, which is a full candle after the aggressive one. Now, here's the risk of aggressive versus loose. If for some reason you got filled long on this bar, and these bars continue to chop around in this box, and then eventually tanked, which they didn't, they went up and it was a good trade. But if it rips against you, what do? You had an aggressive box. You're filled long right here. Let's just do a scenario. Let's paint a scenario out. I think this happened today. I think we got sucked into a falsie on a WIME, didn't we? Why we're looking at NASDAQ was heading up, Russell was heading up. We thought WIME was going to follow. WIME came up, kissed, closed above the mid-band box. We think it was going to go, and then it flipped and tanked. What do? Here, let's do a hypothetical. Let's say you're filled in this bar or this bar, and you can see the bars went up, so it's turned out to be a good trade. But let's say it didn't. Okay, let's say all of a sudden, next thing you know, these bars come back down in the box, and you're upside down. and your 12 tick stop is sitting way down here. Let's do some numbers. Let's say you got filled at 62. You're down here at 50. Here's your stop way down here. 12 ticks down there. And maybe you got 2 lot on. So you're bleeding. You're bleeding out. What do you do? This is really important. This is many of you, a couple of you typed in, how do I get out of losers? Well, one way you could do it is if it keeps tanking, just let it go down and take out your, your 12 tick protective stops down here. That's what it's there for, right? So what the heck? Just let it go get it. You curse at your machine, Toby? Oh man, I remember those days. I got so frustrated. Here, I'll tell you a quick true story. I used to get so frustrated, I would pound on my desk. I just got so lividly angry because I got stopped out. Oh, this is the early, way a long time ago, okay? And I just thought the market was rigged against me. Every time I got in long, this thing starts pulling back. I wasn't doing retracements. This is like 15 plus years ago, right? I actually broke my pinky knuckle by pounding on the table so hard. Isn't that ridiculous? That's how angry I used to get. You can't do that. I was younger. I'm like in my, what is I, 28, 30, something. If you're younger, you get filled with, well, women too. And now I'm 57, so I'm a lot calmer. I can just accept losses. I know they're going to happen. They come and go and whatever. I feel no emotion anymore about it. Doesn't matter to me. Because I know that the next one's going to be a winner or the next one's going to be a winner. It's going to make up for the loser. I'm going to make money. So you have to get comfortable in your own skin about that, right? How do you exit losers? Some of you have typed in the correct answer. This is not rocket science here. Hit the close button. Hit the close button. Look, if you trade for a while, you start to develop a feel for this stuff, right? Because you see it every day. I know what I'm trading, and I have a pretty good feeling of what it's going to do. And some days, algos are pumping. Like, some days you're going to miss trades. Some days you're going to get in late. You're going to get beat up. You're going to take a loss or two. It's going to happen. Just accept it. Pounding on your desk isn't going to change it. It's just going to hurt your hand. Okay? And you don't really ever have to just sit and wait for a market to come all the way down here and get your full stop. I'm just telling you straight up, don't do that. Look, if something's not going your way and it starts to pull against you very quickly, you hit the close button. You get out. You minimize damage. Minimize the damage to a few handfuls of ticks. Take a breather, recover from it, and look to get back in the market. Shane says I'm in a better place right now. I made it out of angry land. Well, how do you know when to get out? Here are your choices. There's some funny stories coming in from people. Robert says, I was so angry I threw a clipboard at a wall and actually stuck in the drywall. That's pretty angry, Robert. I don't think I've ever done that. I've done some pretty wild stuff, but I never stuck a clipboard in a wall. That's pretty crazy. Minnie's saying, oh my God. Don't keep any sharp objects around you. Make sure your family and your dogs and everybody is not around you if you're going to get that angry. So what's a fix? How do we fix that? I heard a comment. Let's move on. I think we've talked enough about this, right? But let's finish this topic. So here was the two trades we just talked about. Okay, we were looking into the future. This one did a shallow retracement. Let's ask another question. Let's all answer this as a team because we all deal with it. How do we collectively stop the anger at the market? What do we do? What can we do to fix that? I'm not asking as a facetious question that doesn't matter to you. This is an important question, and there is an answer to it, and I know what it is. How do you stop getting angry at the market? What can you do tomorrow morning to stop yourself from pounding on your desk and throwing clipboards into walls? Not assuming anybody else does that, but who threw the clipboard again? That was Robert. Okay, Robert. Winning equal happy. Well, that's true. Okay, that's a good step in the right direction. Prozac? No, don't turn to drugs. Come on. Don't turn to drugs. We're not turning to drugs are going to make you sleepy and you're going to be doing worse. Kick the cat? No, you're still getting violent there. Maybe you need go to talk to somebody about that there, Robert. There is something everybody listening to this webinar can do something actively tomorrow to stop being angry at the market. Ready? I'm going to type it in. Some of you have some great answers, but I'm going to go ahead and share what I think it is. This is really simple. You think that might fix it? If you could improve your entry, and entries, proper good entries, generally equal winning trades, which equal what? Higher success rates, lower degree of anger. And getting better entries is going to do what? This is so underestimated. Build your confidence. You don't want to get, I'm talking to everybody here, okay? You don't want to get arrogant and cocky about things. You don't want to think, well, I'm the master of the market now. I learned to draw these boxes. I'm just nailing these trades. I'm invincible. I'm on top of the world. We don't want to get that kind of attitude. That's not healthy. However, if you can just do modest things every single day, a little bit here to get a better entry, change the way you do this a little bit better, draw the ray a little bit better, find out where the region box is, see the support levels, draw the lines. See the top of the box. Draw those correctly a few times. You're getting popped one or twice. Go into sim. Get your confidence back up. Go back at it. Entries are everything. If you could spend all your time working on entries, I would do that. Seriously, I'm not kidding. If you just worked on entries alone, it would change everything. Now let me ask some questions here. What is your success rate? And you can just guesstimate this. It doesn't have to be something you go into the performance tab and look up. You probably get a pretty good idea about that. What is your success rate? I'm going to give you a couple of choices on trades that are outside of the midband. Is it high or low? Shallow retracements, deep retracements, phantom trades, deep pullbacks and trends, range-bound markets. You don't even have to put a percentage in. Once you get away from here, how do you do? Trades outside of this little space. Lewis says all over the chart. Paul says, how about this suggestion? What about no second guessing after you see a setup? It shows up and you got to be ready for a loss. You do. I have zero confidence. Okay, well, you're starting from rock bottom. You got to relax. That's true. All right, let's take this one sec further. I'm starting to get really confident. All right, so let's continue on with this. Statistically speaking, when you enter a trade, what are the odds that you're going to get a win or a loss? Just pure statistically speaking. When you pull the trigger, what are the chances of you getting a winner? And what are the chances of you getting a loser? Just forget about all this stuff, other stuff. That's a simple question. What are your odds? I'm going to put some numbers in here. What are the odds of success? I got to put some numbers in here. What is it? Now, I'm not saying that you're using any special mojo of. I'm taking that all out of play. I'm saying that's not a. It is a factor, and we're going to talk about that. The planning ahead part, the lines on the chart, the support, the resistance levels, the trend, the location of the bars, all those kinds of things. I'm saying just statistically speaking, putting all of that aside for a minute, it's 50-50 when you pull that trigger. Statistically speaking. Statistically speaking. Now, what can we do to change that? But before we change it, you have to be prepared knowing, statistically speaking, the odds are 50-50. So when you know it's 50-50, what are you prepared for happening after you pull the trigger? Is it going through your head when you pull the trigger right now? And I'm talking about everybody here as a team. I see a lot of great answers coming in here, and you're taking this all into consideration. When you go into a trade right now, everybody, do you feel strong and confident that you're going to make money from it? Are you on the fence like, man, I hope I made the right call there. I really don't know if this is going to work out. Or are you living in fear? You're going to pull the trigger, and it's going to go, and it's going to nail you for another loss. Because we just said here 50-50 that could go either way. All the above. I'm scared to lose. Trade in the direction of the trend. Sound words from the man that puts clipboards into walls. Sound words, my friend. Good words there, Robert. With slippage and commission, it's actually technically less than 50-50 because you're in the hole when you start. That's true, Greg. That's a good point. Lewis says, I'm closer to 90% win rate, 10% losses. Good for you. So here's what you're doing. Here's how you're building your confidence, and here's how you get your win rate up. You have to start using all of the tools at your disposal to increase your win rate and go ahead and build that confidence. Right? So when we say, what are we talking about when we say tools at your disposal? What are we talking about? I'm going to clean this chart off so we can get all the words up, because that's what's important right now. We'll circle back to the rest of it. Is everybody cool with the trades? We looked at trades in detail. You get all the lines over here. Oh, it erased everything I wrote. Oh, darn it. Oh, no. Dang it, I was right. Making the final point. Oh, no. All right, here's how I'm going to sum all this up. Let me just bring it all to a quick conclusion. Okay. When we teach, Gary and I teach, and we've been doing this for almost 10 years now, teaching this stuff every day for thousands, literally, of webinars we've done. Okay, people all over the world watching this stuff. You have to get to a point where you do, I'd say, a couple of three things. Find the instrument that works for you. Those of you who've been around for a while, you've heard me. It must sound like a broken record. I've said that 500 times. If you don't do this one thing, you're screwed. That's number one right there. You got to get the right instrument. You can be really good at trading, and say you pick that you want to trade 6A or E or gold or whatever, and you get hammered. Well, you're trading the wrong instrument. You got to experiment around out there, and you're going to find instruments that work. I don't trade all the instruments. Some days I only trade a couple of them. Some day I might trade one. Other days things are all flowing real nice. I might trade 4. Find the instrument that works. Perfect your entries. Now, when I say that, I'm saying identify, and this is sort of the heart of the matter that I was trying to get to, the optimal, which is the best. That means the best trade entry that you like, and get very good at it. So let me explain what I'm talking about. See, when we're teaching all these different instruments and all these tools to people all over the world, we have to show shallow retracements. We have to show where a market's going to pull back and you take a long on a shallow retracement. We're going to show mid-band trades and how to take them, where to draw the box and how to do the ray and all that sort of stuff, and where support and resistance are. These are other shallow retracements. Is this acceptable? Yeah, it's a little bit light, but it is. And there's other ones that come down here, right? There's deeper retracements like here. There's sometimes they come way down into here. It's a phantom trade or whatever. Find the trade entry that you like and stick with it. If you're not good at shallow retracement trades because you just can't seem to get in at the right time, you're always getting in a little too late, you're getting filled at the top and you're getting stopped out, or you get in too early, like you get in a bar over here and it pulls down and you're feeling some pain. Well, then, if this shallow retracement trade is not working for you, what should you do? Should you continue to take this? Yes or no? You just tried this trade 100, maybe not 100, okay. 20 times you traded on 3 different instruments, and the shallow trade, your win rate is actually less than 50-50. Should you continue to take that type of trade, yes or no? No. If you have experimented with mid-band trades and you're getting some pretty good luck, but you need to fine-tune a little bit about where to actually get in, you're starting to see a little bit better. Maybe you're drawing the ray, maybe you aren't. Should you stick with that one? Yes. If these deep retracements down in here in the bar, you're in an uptrend and the bars are turning red, you're turning the other color, and they're coming way down into here, and you're thinking trend change. You can't really see where you want to get in because there's all bouncing around down here. Should you take this trade? Your success rate's like 40%. No. See how you're weeding things out? However, and when I put this caveat in here, what I'm telling you is not to just blanket exclude all these different types of trade. I'm not just saying go in and chuck a trade out the window setup, right? That's not what I'm saying. It doesn't exclude the fact that you should be trying all of these things. Try the shallow retracements, try the red bands, try the deep retracements, try try all these different things. But you have to track your success rate to know what you're good at. Once you know that, and I showed you how to do it, performance tab. Everybody remembers that, right? You go in your performance tab, pick your instrument, pick your thing, hit report, go back a week, go back 2 weeks, go back 3 days, whatever. And you go back and you look at these trades, and if you say to yourself, well, you know what? Those mid bands, I'm close to that. I think I got 55, almost 60%. Shallow ones, not so good. Deep ones, I really struggle. And here's the final thing. And this is super huge important. You've got to identify quickly. I'm going to devote a whole webinar to this, and I'm running out of time. Identify the current market condition. What does that mean? What is a market condition? What the heck are you talking about? Are you in a trend or a range? These 3 things. If you can work these 3 things out, you got a winning combination right there. Right there. That's it. Find the instrument that works for you. Get really good at seeing how it works. Get comfortable with it. It's like finding a spouse, right? Perfect your trade entries. Pick the type that works for you. However you do it, by hook or by crook, So now you got the entries on the instrument that you like. Check marked 1, check marked 2. And then perfect trying to quickly identify whether you're range bound or you're in a trend. Now you can be up to sideways, you can be sideways to down. There are various combinations. We've looked at that hundreds of times together. There's pure uptrends, there's pure downtrends, there's ranges. And the final thing I'm going to say, because we're out of time, is how many, quick show of hands, how many of you like ranges, how many of you don't like ranges? Just show of hands. Do you like trading ranges or you don't like ranges? Yes or no? I can't answer that for you. You need to answer that for yourself. And the only way to do it is to get in there and trade them and not trade them. Trade them and not trade them. Experiment with them. See how you do. See if you can identify the top and the bottom. See if your primary mode of entry should be long or it should be short. Should you be covering at the bottom of the range? If the trend is up, you're buying support in the bottom of the range. You all know that. You can know all the rules and still not like ranges. I personally don't like ranges. You remember on Tuesday I hardly said anything all morning? You notice that? Anybody here was in there? Was it Tuesday morning? I think it was Tuesday morning. I hardly said anything for an hour and a half. I wasn't asleep. You remember that, Dennis? You remember it. I'm sure all you do if you were in that room. I hardly said anything that morning. It might have been yesterday before the inventory numbers. So here's what's happening. There's no clue to it. A lot of traders take the whole month of August off. August is traditionally the worst month of every year to trade. And in particular, the last week of summer, right before Labor Day, a lot of people are taking vacation. Big institutions, all their traders are taking breaks. Traditionally, it's very choppy. I mean, we kicked around the idea of not even trading that last week because it's just so choppy. So when you see range bound, you come in and you put a couple lines on the chart, you see it's range, stuck in a range, you have to say to yourself, I'm going to trade this. I see the range, I'll trade it, or I'm not. I don't like ranges. All right, hold on. I'm going to scan this. We're running out of time.